Welcome back, everyone. You're to the Moneycontrol live stream. You're watching markets with Santo and CJ. Well, today's trading session has turned out to be as boring as it comes. The market is flat, the sentiment is flat, and the indices are flat. If you look at the Nifty and Sensex at this point of time, they are barely trading in the negative territory, although impressively they did recover from the earlier losses that we saw at the opening point of view. So there has been a little bit of momentum shift towards the bulls, but at this point of time remains largely a flat market. If you look at the cues that are emerging from global markets, they have also been largely in favor of the bulls actually. The Asian markets are doing okay-ish, while the European markets have gotten off to quite a strong start. So at this point of time, it seems like it is a very local sentiment, Santo, that is keeping the bulls in check as well as the bears at the same time.
Well, it may be it may look like a boring session, but one of the fundamental rules of the market is that people are either making or losing money all the time. And given the heightened activity in the F&O market, I'm sure now there's a huge audience of traders who have strategies in such a way that they will pray for the markets to be range bound so that they make good money.
Yeah.
So don't feel sorry for the bulls. I'm sure there are enough people still profiting out of it. But that said, I think the main point of weakness is the broader market. You're seeing pressure there, and that's very important because CJ, domestic inflows has been what has kept the market high. It's been a major driving force. And once you see people, retail investors lose money consistently, which I suspect they have been for some time now, given the underperformance of mid-cap and small-cap stocks. I think that will then lead to the market liquidity further drying up and the market getting stuck in a narrow range. So it's the underperformance of second line stocks that really worries me, CJ.
Well, they might be underperforming, Santo, but I don't think that there is so much panic out there in the market as probably a lot of the price action has suggested. If you speak to a lot of the wealth managers, fund managers out there, they suggest that they are not yet seeing the sort of, just sell everything that you have got and run away so that you can protect your capital sort of momentum that we used to see in previous, drawdowns like this. But yeah, point taken. Definitely, as the going gets tougher, it will, of course, raise doubts and plenty of doubts in the mind of retail investors, and it is important to see whether that sustains or not. That said, let's quickly
wait, CJ, tell me, what's your take? What's the rate hike quantum going to be?
I think it will be anywhere between 37.5 and 57.5.
Oh, well, that's a very precise number. What about it? Why 37.5 and why 57?
Well, because 37.5 is the one that they did not go with. They ultimately went with 40, and so I'm just guessing that it is going to be in a factor of 7.5 from here on, because definitely the RBI is no longer beholden to traditions and norms anymore. It's no longer 25 and 50 and 75. It's only 40, 30, 35. So it basically is anybody's call at this point of time. As our colleague Aparna here wrote in a column today, definitely there is a lot of doubt about what the quantum of the rate hike will be. No doubt when the rate hike is going to happen.
So I think that is the rate hike by RBI, which I think most likely is expected to be 50 bips, is something again that could weigh on sentiment.
Yeah, I mean, definitely market has been readying itself for it for almost a month since the last time the emergency meeting happened in the first week of May. So I guess there won't be too much of a shock. I think the only shock could be the quantum of the rate hike, whether if it is on the lower side, then that will be a positive surprise for the market. But if it is on the higher side, then that will definitely hurt sentiment even more and raise question marks about what happens to economic growth at home.
Well, that's it. Let's dive into the stocks that have caught our attention, starting with Cipla. Now, CJ, this is a market where I think one should always adopt a safety first kind of approach. Now, in the case of Cipla, the fourth quarter numbers were not all that great, but
yes.
So, the analysts bullish on the stock feel that the company has still managed to put a fairly credible performance in the domestic market. It launched about 19 odd products during the fourth quarter itself, and the main strategy is that to build on the domestic market, and at the same time, its respiratory and peptides portfolio are doing fairly well in the US market.
Okay.
And if you look at its recent launches like albuterol and aformoterol, both of them have managed to gain market share in the US, and that has to some extent helped the company offset the erosion in pricing in the US.
Well, Santo, for me, yes, Cipla definitely so far has been an outperformer if you compare it to its benchmark Nifty 50. But the outperformance has not been anything to celebrate about. I mean, the stock is up about 4 to 5% for the year. So if you're looking to just keep your $100 at $100 for the rest of the year, maybe you want to go with Cipla. But if you want to probably make money on that $100, maybe Cipla is not the best place to be in, even within the pharma sector, I would feel. The Q4 numbers were underwhelming given the expectations that were built up for the stock. I mean, let's not forget, in 2021, Cipla was one of the best performing stocks on the Nifty 50 index. Same goes for 2020. So given the 2 year of run up in the stock, given the expectation that were built, Q4 was a little underwhelming. Plus, the US business for me is not a given at this point of time. The erosion that we are seeing and the commentary that we are seeing from some of the rivals of Cipla out there who have actually bigger businesses in the US than Cipla has, they have been indicating that there is significant price erosion happening in the existing business. Maybe not in the newer products that are coming in, but at least in the existing business. And it is the existing business that definitely contributes more to the margins, and therefore there is a question mark on how the margin performance is going to be. Do not forget the Cipla is also starting to see a lot of cost build up because lockdowns are no longer there. So a lot of its field force is out there doing promotional activity for the the number of products it has launched in the Indian market, and that definitely is increasing its operating expenses.
But
and it's going to keep that higher.
But that would be applicable to most other pharma companies also, right? And also, according to KRC, according to the brokerage, the stock is still a good buy at these levels, and it's one of its strategy is to get into products where there is less competition in the US. So that is also part of its strategy there.
Well, Santo, that strategy has been in place for the past 3 or 4 years, and definitely Cipla has done well in trying to get a lot of the limited competition products on into the market. But for me, I feel that the stock is quite priced in the most of the positives out there. The upside seems very limited given it is not too far away from its 52-week high as well, which was at the time of peak optimism for the company. So for me, probably if you are looking for upside in this market, Cipla is not the place to be. But if you're looking to protect your downside, then maybe please go ahead in that sense. One stock where I feel that market is being a little pessimistic, although today the stock has risen about 1.5–2%, is Balrampur Chini. Now, this is one of the best stocks I can think of in the entire sugar pack, which in itself is becoming now a structural story instead of the usual traditional cyclical story that it used to be. The rise in stock today is largely on the back of this positive sentiment that India has finally achieved its blending target for ethanol almost 5 months ahead of schedule, Santo, and that goes to show that companies have risen up to the challenge that the government has posed to these sugar sector companies to improve the level of ethanol in the overall fuel blending in the country. Now the next target is to bring that blending level to 20% from 10% currently. Now that itself is possibly going to be achieved in the next 1 or 2 years, possibly 2.5 years, and that I feel is the big positive for a company like Balrampur Chini. They are increasingly investing on their distillery capacity to take advantage of this new phenomena that has emerged in the sector. And definitely, if you look at the the consensus price target for the stock, that is somewhere in the range of about 539 rupees. That is suggesting an upside of almost 31%, I beg your pardon, from the current levels. So there is significant steam left in the stock, I feel. There has been a decent amount of correction in Q2 from April onwards, but I feel that there is a lot of leg here.
Well, CJ, the sugar story was largely a favorite with the retail investors, and that big sell-off which one saw after the government said that it would cap sugar exports, at under 10 million tons. That's been a major blow to sentiment, and you saw a big sell-off there. And I think that has really changed the overall outlook for the sector, because remember one thing, CJ, the big concern that investors have with the sugar sector is that at any point, there's a sudden policy change which then kind of, completely changes the complexion of the game, and that's turned out to be true once again. I accept the ethanol blending story there, but at the same time the policy interference is something that will weigh on sentiment. And remember, the stock has taken quite a bit of a beating. It was something like 500 odd plus sometime in April, and it has fallen all the way to below 400, and now somewhere it's at 400. So you're seeing some kind of short covering there, but I am not sure if you the investors who have taken a big beating in the stock would be, coming back to the counter anytime soon.
Well, Santo, the longer term story definitely remains intact for Balrampur Chini. And as far as the export, curves are concerned, the curves were actually, it turned out their initial reaction was definitely panic. They were not as bad as a lot of the initial reporting suggested that it would be, given that a large part of the export that the sugar mills do currently is already met under the current quota. So therefore, it will not really, hinder any export agreements that companies already have. What is probably going to be hindered is the pace at which government approvals comes in for export orders. That is going to be something that investors will look out for. But overall, if you're getting into the sugar space, and investors who have got into the sugar space over the past 1 year, they have definitely gotten for the ethanol story. They have not gotten for, say, unlike steel prices, they have not gotten for a price hike story where margins are improving. They have gotten for a top line story where definitely there is a lot of room for growth.
Last 3 years, top line has not gone anywhere. It's remained within a range.
True.
Last 3 years, operating profits have actually been declining despite the ethanol story. So, at least as far as the earnings go, it doesn't look so hot. Maybe it will change.
Well, Santo, you were talking of 3 years or 2 years of COVID times, right? I mean, in that period, if the company has managed to just able to sustain its 2019 level of revenues and operating profit, I think that is commendable.
It is far below that, by the way. But anyway, NMDC is the next stock on our watch list. Now, this was a story mainly about, I know the company was doing well, fourth quarter numbers all were pretty good, but now again there is a change, there's a twist in the script, as I would like to call it, after the government imposed an export duty on iron ore and related products. So the stock has taken quite a beating. Again, sentiment has completely changed, and I think it will be a long time before investors start coming up to the stock. The stock is available now almost at one-time book, but that I don't think is really going to enthuse investor. This is a stock I would say one needs to stay away from.
Well, Santo, definitely NMDC, unlike probably his steel sector peers, has actually front-loaded the entire price cuts that it could take. They have taken about 26 to 30% price cuts in two installment so far. One after the export duty curves were introduced. So there is definitely some negativity that has built in. The earnings estimates are definitely under threat. But for me, I feel that if you look beyond the pricing story, there is also optimism in terms of the demerger of the Nagar steel plant. Finally, the company has managed to initiate the process for that. So that is going to be something to look out for, because there could be decent amount of cash flow coming into NMDC related to that. And apart from that, if you look at the longer term picture for NMDC, and it's definitely a direct proxy between the capex revival story that everybody has been talking about. Now the Karnataka iron ore mines were allowed to finally taken off or evacuated from those mines after the Supreme Court order. Going forward, definitely there is going to be a lot more auctioning happening in iron ore mining. And if the capex revival story does come in, and if we see the construction sector pick up the various a lot of the reality developers have been talking about, definitely NMDC remains a stock that you cannot ignore, and probably at such valuations, and if you have a longer term time frame, maybe it's worth a look. I would not suggest to totally junk the stock at this point of time because you have made losses in the short term.
2 price cuts already since the export duty were announced, according to brokerage house Bank of India Merrill.
Yeah, definitely, that is true. One stock where definitely the sentiment took a beating last month, but there seems to be a little bit of fundamentals coming now back into the picture is Angel One. They came out with their monthly business update for May, and it was quite a decent, resilient showing given the sort of chatter that has been around broking companies and stock brokerages ever since Zerodha's CEO Nitin Kamath came out with those blockbuster tweets suggesting that there is slowdown happening in user acquisition and user growth across the discount broking platform. Now, if you look at the internals of the numbers, they continue to add clients at a run rate of more than 400,000 per month, which is quite spectacular according to some brokerages, because it is higher than the estimates that they had for the company. They did add more clients in the May month. That goes to suggest that maybe the retail story is not slowing down as much as you are thinking. And overall, although they have seen a loss in market share in the F&O segment, they have been more than able to compensate that with market share gains in the commodity segment. And definitely commodity is something that has been quite in the focus for the past 2 to 3 months, given the sort of trading that we have seen in the metals and the crude oil futures on the MCX. Apart from that, stock remains a proxy to the financialization saving. I mean, everybody has said this. This is a story that has been known since the time the stock has made debut on the bourses, and definitely for me, it still remains worth it to stick with this.
CJ, point taken, and even hard to pick holes as far as the core numbers go. Yet there's something that the market seems to be sensing. If you look at the price underperformance for quite some time now, these stocks have been under pressure for a while now, last 3-4 months, clearly indicating that the market seems to think that the best may be over for broking firms. The rally in the stocks had begun much before that. Again, the market had anticipated that, and in fact anticipated that correctly, which is where you saw the price rise going, the prices running up sharply, and after that you've seen a steady, in fact, decline in the stocks of almost all the listed players. And this is not just for the broking industry. Even if you look at the depository companies, if you look at all market infrastructure.
But BSE and CDSL have been actually surging for the past 3 days, Santo.
No, they've been surging for the past 3 days, but again, you look at the peak prices. Look
definitely.
at mutual funds, for instance. Everywhere there is a very clear kind of.
I don't think I will count mutual funds into the story. I mean, they have been dead and buried for past 3 years, so I don't think they are counted in this story at all.
Well, okay, even if you were not to consider that, I think the market seems to be sensing something here, which is why you're seeing the underperformance in these stocks.
I think, Santo, definitely, much like every sector out there in the market, which was, the darling of the bulls in 2021, the broking houses or brokerages have also seen a similar level of correction. There was, let's accept it, there was a lot of froth, there was a lot of over-exuberance in the market, especially in relation to the entire financialization scheme. You talk about BSE, you talk about CDSL, Angel One, and some of the other brokerages out there. So all of them had seen spectacular gains, spectacular rally, and there was a need for a bit of a correction. I mean, there would be, we would probably not be here if stocks could always go up, right? And I think that is what the case is here. There was a need for a correction, and the correction has happened, and probably longer term buyers will probably look at this correction as an opportunity instead of something that they should be scared of and get out of the stock on the first juncture.
Well, the last stock on our watch list is Bayer CropScience. Good set of fourth quarter numbers, and it was driven primarily by the huge surge in sales of corn hybrid seeds. And according to Kotak Securities, the outlook for the corn crop continues to remain positive, although while it's slightly concerned that the best may already be captured in the prices. But at the same time, overall CJ for agrochemicals is the story to be in right now, given the scenario of crop price inflation, which is the time also when demand for agrochemicals seem to go up and farmers invest a lot in it. So I would say that given all these reasons, probably it does make sense to have a look at Bayer CropScience.
Well, Santo, I will share concerns of Kotak Securities. Definitely, it seems a lot of the positives are in the price. The stock has been one of the best performers out there in the agrochemical space, and the only concern for me would be that in the agrochemical space, I think the story or the growth story is more towards export plays than towards inward-looking domestic plays. And Bayer is largely an inward-looking company catering to the domestic market, although it has some export happening from the Indian subsidiary here as well. But for me, in the agrochem space, I would rather concentrate on the export plays like UPL, then probably focus on more on the domestic side of the story here, because there is concerns about policy intervention, policy changes, given that higher input prices are never good for farmers. Even if crop prices are rising, it will always eat into their profits. So therefore, given that we are heading towards to general election in 2 years, there is a possibility the government might want to ease the pain on the farmers, the end consumers of agrochemical products. And therefore, for me, Bayer probably has done good. It has made money, but it is time to probably look at other stocks in the sector than Bayer at this point of time.
Okay, CJ, so what do you have on the horizon? What is it that we need to keep an eye out for?
Well, Santo, there is not much happening tomorrow in terms of economic data points. The most important data point that is going to be coming out is the balance of trade data point in the US. Apart from that, of course, investors will be biting their nails over what the MPC is deliberating at this point of time. The Monetary Policy Committee's meeting started off today, kicked off today, and it will continue over the next 2 days, and we will have the outcome on Wednesday morning. So everybody is all the eyes are on the MPC at this point of time. As you suggested, nobody knows what the quantum of the rate hike will be. You and me probably know as much as probably the layman out there on the street, but all we know is that definitely there is going to be a rate hike. Apparently there are talks that there could be a CRR hike as well. So let's wait and see. It is something that I feel that the market may not go anywhere over the next 2 to 3 days until and unless the MPC outcome comes. And you can see that in the reaction also at this point of time in the market. Indices are largely very flat. I mean, the Nifty had just turned into the red at this point of time, down by 0.1%. Nifty Bank is the one that is holding fort at this point of time. Santo, the index is up about 0.2%, and Nifty mid cap and small caps are the one that are taking the beating. Nifty small cap 100 index is down by 1%, and Nifty mid cap 100 is just about flat.
Well, with that, it's a wrap on this edition of Market with Santo and CJ. Hope you enjoyed watching it. Please do share your feedback in the comment section below.
And do follow us on the social media links at the bottom of your screen. And for rest of your financial news, always stay tuned to moneycontrol.com and the Moneycontrol app. We'll see you again tomorrow, 9 a.m. sharp. Take care till then.